Hello, and welcome to Donut Investment. This analysis is for Whitecap Resources on the Toronto Stock Exchange as of 31st of July 2026 with a share price of 16 Canadian dollars 58. The full report is on donut.ca, a best-in-class Canadian oil producer that just posted a record quarter and raised guidance for the second time this year at a 7% free cash flow yield with a safe 4.7% dividend, with oil back near $90 on the Iran flare-up as a live tailwind. The one caution, the stock is extended near its 52-week high, so buy pullbacks. Whitecap just reported a record second quarter, funds flow of $1.4 billion, and after drilling it still generated over $900 million in free cash. Revenue rose 93% and net income jumped 186% year-on-year, production beat its own forecast, and the company raised its full-year guidance for the second time in 2026. This is a low-cost, low-decline machine built to convert oil prices into cash returns, a 4.7% dividend, well covered, with buybacks on top. On cash, it's attractive, about a 7% free cash flow yield and a well-covered 4.7% dividend at roughly 14 times forward earnings, below the level that's rich for an energy name. 16 analysts rate it, unanimously a buy, with a mean target near $20, about 19% of upside, plus the dividend. The catch is the entry. The stock is up about 70% off its lows and sitting near its 52-week high, so it's cheap on cash, but the tape has run. The chart confirms the buy. Every time frame is in an uptrend, and oil back near $90 on the July 29th Iran re-escalation is a live short-term tailwind, which is why the near-term call is a strong buy. The nuance is that the monthly momentum is stretched, with the RSI around 73 near the 52-week high, so the higher quality way-in is to buy pullbacks toward the 1560 to 1590 support rather than chase the breakout. The risks all trace back to one thing, the oil price. The short-term strong buy leans on the Iran premium, so a verified de-escalation that bleeds oil back toward the low 70s is the main downside and would likely pull this extended stock back toward its mid-teens support, the bear case near $12. A broader fall in oil is the dominant driver, not any competitor. The cushion is real, low costs keep the dividend safe well down the price curve, and the balance sheet is strong. Now weigh the risk against the reward. The bull case is roughly 45% above today, the base case, the most likely, about 15%, and the bear case a fall of about 28%, so you are risking about 28 to make 45. So, our call on Whitecap Resources, on the Toronto Stock Exchange, strong buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donut Investment at donut.ca. The link to the full report is in the notes below. Have a great day.